So our total expenses, let's use the formula here. Now, if one of you has tabulated it, okay, let me use the quotation here. So our total expenses will be 119,980. Compared to our total income, I think we'll come at a net profit. Okay. Now let me give some summary comments and then we'll look at the balance sheet. So please, when you are preparing your trading profit and loss account, so when you are preparing your trading profit and loss account and you have additional information or adjustment to make, please take your time. Start the usual trading account, right? But first of all, appreciate the things you have been given to adjust. Closing stock is one of them. You can have expenses prepaid, expenses owing, income prepaid, income owing. I think we have concluded on that. We add the owings or accruals, and then we less the prepaid, whether they are income or expenses. Add accruals or owings, less prepayment or advance. And then if the owner withdraws anything, you less it, and then in the balance sheet is part of your drawings. So if it is goods, you less it from purchases. Right. Now you appreciate that in the trading account, the first adjustment we do is when the owner takes goods. And I think that is very simple. When you get to the profit and loss account, where you add other income, so there you have to check for any income prepaid or income accrued, right? And that's what we did for this question. Some of the income were prepaid, others were accrued. We less the prepayment or advance, and then we added the accruals. Then you do same for the expenses as well. You do same for the expenses as well. Okay, you add the accruals, you less the prepayment. And when you come to the bad debt, if you see bad debt in the additional information, it is taken to your expenses, but check the trial balance. If you have some already there, you add the two. So in this question, we had bad debt 600 in the trial balance and 200 in the additional information. So we added the two together to have the 800 total bad debt. Then provision for bad debt. I think I spoke a lot about that. Just compare the old to the new to see whether you have to increase or decrease it, right? The increase will be part of your expenses. The decrease is part of your other income. Then interest on loan, as you saw, calculate the interest. So if the rate is 5%, 10%, multiply by the loan amount. In this question, it was 10%. We multiply by the loan amount, 140. We had our interest. Then for depreciation, the two methods I hinted about, straight line or on the cost of the asset, and then the reducing balance, which is on the book value. The straight line seems simple. You pick the rate, you multiply by the cost of the asset. But for the reducing balance or book value, you multiply the rate not on the cost, but the net book value. And I just indicated to you the net book value is the cost minus any previous depreciation. This information will be in the trial balance. So for machine, this was the cost and this was the previous depreciation. For the furniture, this was the cost. It also had a previous depreciation. But because the method is on straight line or on cost, we didn't less the previous depreciation. If it had also been on reducing balance, then we would have deducted it before applying the 10%. Okay, now let's go to the balance sheet. Please, any questions so far based on what we've said or discussed so far? Any questions? There are no questions. I want to believe that my professors are okay. So let's see the balance sheet. Let me see if I can do it here, just beneath the question. So balance sheet as at, I think it's 31st December 2016. Please, before I continue, are my professors really okay with the adjustment we have done so far? Okay, so if we are okay, then we'll go to the question and pick our fixed assets. And I want to believe at a glance, we appreciate that the fixed assets are, so at the debit side, we are looking for our fixed assets. I think we have the furniture and then the machine. Furniture with a cost of 95, machine with a cost of 90,000. So furniture 95,000 and machine that's 90. So we have the cost easy without any stress. Now the accumulated depreciation, professors, listen and listen good. Since you have adjustment in here or additional information in the balance sheet, look at how you get this accumulated depreciation. First, check the trial balance. If you check the trial balance at the credit side, you see provision for depreciation, right? Pick this figure and then come to your profit and loss account and pick the depreciation you have also charged on that asset. So the accumulated depreciation in the balance sheet is looking at what was already there in the trial balance plus the new one you have calculated in the current year. So for furniture, we had 5,000 provision for depreciation. Here it is. Okay. So pick that figure and then come to your profit and loss account because you have already done that calculation on furniture. So 9,500. Add the two together and that is 14,500. So that becomes your accumulated depreciation. Don't forget this, please. You do same for machine. So you check the trial balance. If there is none in the trial balance, it is 0. So you come to the additional information and pick the figure there. And 0 plus that figure, whatever you get, you put it there. Now, for machine, the old provision was 10,000. In the current year, we calculated and had 4,000. So we put those figures together and that should be 14,000. That is how you get your accumulated depreciation. You can now less it from the so 95 minus 14,500. Then also have 90 minus 14,000. So the first thing you can do to earn your simple maths in the balance sheet is assemble your cost, get the accumulated depreciation, the net value. Now we can get our total here for the fixed assets since these are the only two fixed assets we're given in this question. Then we now move on to our current assets. Please, any question on the fixed assets? I don't want to believe so. Current assets. Based on what we discussed on balance sheet, your current assets begin first and foremost with your stock, followed by debtors, prepaid expenses, accrued income, your bank, and cash. So we pick our stock, which we have here 360,000. The closing stock, obviously. Then followed by the debtors figure. But again, here you have to take your time and pay attention. I think I only have Frank in the class. Well, I'll continue since I've shared it before. So pick your debtors. But remember, we said that because of the additional information telling us about provision for bad debt and bad debt itself. During the discussion of the additional information, we said if you have bad debt, provision for bad debt in the additional information, you less them from the debtors. So first and foremost, we will pick this debt as 15,000. But we have additional information giving us bad debt 200. So we have to less it from it. And telling us about provision. And for the provision, I indicated to you that you less the new provision. So this debt is of 15,000. We are going to less first bad debt, which is 200. And also less the new provision for bad debt, the new provision for bad debt. And based on the analysis we did, the new provision was how much? 3,000. Oh, sorry, was 1,480. 1,480. That was the new provision we had based on the analysis we did. Because the old provision was 0. There was none in the trial balance. So it was 0. And in the additional information, we're told 10% on debtors. Okay, so we multiply the 10% by this 15,000. But because of this bad debt of 200, we had 10% multiplying 15,000 minus that bad debt of 200, which is in the additional information. So we arrived at 1,480. And these are the two things you adjust from the debt or adjust to the debtors figure in your balance sheet: bad debt and provision for bad debt in the additional information. So 15 minus 200 minus 1. So this is your debtors figure. Very simple. Now, after your stock and debtors, the next thing is your prepaid expenses. So check the question. You won't find them in the trial balance. You'll find them in the additional information. Prepaid expense and accrued income, or any income in arrears. So if you check through, you see this first one is commission unpaid. And as we saw, the commission was an income. So an income unpaid is the same as income owned. So that will be part of our current asset. The next thing, telephone outstanding, accrued salaries. These are expenses and they are not prepaid, they are owned. So they will not be part. Rent received in advance. The rent was an income. So received in advance, that will be a liability too. Okay. So we only have this commission unpaid. That's the income owned. That is the only thing that will be part of the commission unpaid. 1,800. So the question didn't have any prepaid expense. It was only accrued income, or an income that has been unpaid or the business has not received it. And we saw it's an asset. Okay. Then after that, you check for your bank and cash balances. Your cash and bank balances. I think we have cash and also have bank. But again, if you are not careful, you'll miss the point that the owner took some money from bank. So the cash had no issue, so we put it in there straight away. So cash 29,500. But the bank was 39,000, and we are told that the owner took 9,000 from the bank for personal use, so we have to less it. Okay. So 39,000 minus the 9,000 the owner took for private use. That will bring us to 30,000. So if he had taken cash, we would have deducted from the cash, but this time he took from bank. So you appreciate when the owner takes something, less it from that particular item. So we can now get our total current assets. So in assembling your current assets, these are the things you have to pay attention to. The closing stock most of the time has no adjustment on it, but debtors check for bad debt and provision for bad debt. Then you go for your prepaid expenses and accrued income from your additional information. Bring those that are there. In this question, we didn't have any prepaid expense, so we didn't bring it. Now we move on to less current liabilities. And current liabilities, you appreciate during the discussion of the format, the first one was creditors. So we check the trial balance for creditors. Creditors most of the time too does not have any major adjustment. Nothing has been said about it here. So 21,600. Then apart from that, we also saw bank overdraft if your bank has a credit balance. In this question, there is no bank overdraft, right? Our bank is a debit asset. If it were to be a credit, that would be. Then the last two is your expenses owings or accrued and income received in advance. And you'll find them here, right? So you see the expenses owings or outstandings, telephone and salaries. Let's check, yes. And then the interest on loan, it has not been paid. So always watch out for interest on loan. If you calculate it and it has not been paid, if it has been paid, you see it in the trial balance. Sometimes they don't pay all, they pay some. So you calculate the interest as expense in the profit and loss account. Check the trial balance. If they have paid some, you compare and the balance goes as a liability. So in this question, they haven't paid anything, and the interest we calculated was 14,000. So it means they are still owing 14,000. So let's pick these expenses in there. So we have first was telephone outstanding, an expense outstanding, and accrued salaries. The interest on loan has also not been paid. Let's bring these figures in. So 1,002 for telephone, 15,000 for and 15,000 for salaries. Then the interest on loan is 14,000, right? Now, you can appreciate what we discussed earlier, right? That if expense is outstanding, you add it in the profit and loss account. So you see, we added 1,002 in the profit and loss, and in the balance sheet is a current liability. So that's how it works. So these, I believe, are the current liabilities. Let's get the total current liabilities. Now come under the total current assets. So we could get our working capital. So working capital is there we have it. We add it to the fixed assets so we can arrive at our net total asset. So working capital plus the total fixed assets, 156,500. So we have 539,320 as the net total asset. If you have any question at this point, you can. Okay. Now we move on to financed by capital. So let's check the capital. It's 400,000. And you know what to do. You add the net profit, you less drawings. You add net profit less drawings. So let's check our net profit, which is 58,320, and also less the drawings. But again, the drawings, you have to be careful because of your additional information, right? So already you have 19,000 in the trial balance. So pick that one. And because we have additional information telling us that the owner took goods, number one, for private use, that's 2,000, and he also took 9,000 as well. So that's 11,000. We add that to the 19,000 already in the trial balance, and that will be 30,000. Okay. So that's the point where we say when the owner makes drawings in the balance sheet, it's part of the drawings deducted from capital. Let's see what we get here. This plus the net profit minus the drawings. We have 428,320. Then we add the long-term liabilities. Long-term liability is the loan. The loan, I think, is 140,000. So let's add and see if we'll get our capital employed being equal to. Fortunately, we have a capital employed equaling 568,320. Comparing to this, it means there's some amount that is missing. Let's check that amount. So this minus this. Some 29,000 is missing somewhere. It's possible it could be an omission or a mistake we have done. Right. So I think we have always had the opportunity to make some of these corrections. 29,000. Where could that? First of all, let's check the trial balance if there's no difference in the trial balance. But this 29,000, I think, looks familiar. But basically, what is important in an exams, if you have such, just ignore and move on, because if you try to go over and do the correction, you might waste time. So you go and finish up your questions, and then you come back to rectify. So let's rectify the error. Yeah, and rectify the error in the final session. So let's meet in the final session. Thank you.